Alright, it's Tuesday, 25th of May 2010, and the markets are plunging. What's going on is what I've been warning about for a very long time. If you watch my videos, I have not believed in the rally that we've seen since March of last year. I have been amazed at the strength of the rally, the length of the rally, and the fact that everyone seemed to buy into it, not just with their money but intellectually as well, that it's over and the danger is over, let's just jump all in. I'm telling you that this plunge now is the beginning of the next down leg, the next serious down legs. We are going down significantly, and what we really are doing is going back to where we were in March of last year and starting a process of realigning the economy, readjusting the economy, going into a depression, a real depression, something that changes the structure of the production in the economy. This is a fundamentally different event from the recessions that we've seen during the last couple of, lifetimes, 30 years, because we have seen the end of a credit expansion. We have seen the true bursting of a bubble, a credit bubble. And even though the governments are trying to inflate it on the fly, I mean, we have this bursting credit bubble that blows, and then as it blows, the governments are just pumping hot air into it, trying to sort of waffles like that. It's not really a filled balloon, but it's an envelope that's just hot air blowing through it. That's what we see now. So this needs to contract and then build up again. Maybe a new bubble will blow up. So this is fundamentally different. If you look back on my videos, you've seen that I warned about this for a long time. But it took so long that eventually I stopped making daily videos because I was just looking at the market and just shook my head. And I haven't been able to time it this time by shorting the market. I'll be the first to admit that. But I've been in gold, and gold is also denominated in dollars, and I also recommended that if you look back on my videos. So you have two things that are going strong when the crash is coming. The dollar is going strong and gold is holding up very well. So I have some dollars, I have gold denominated in dollars, and then I had diversified cash and some mining stocks. The mining stocks are taking a hit along with the rest of the stock market. But that's, I hold them for diversification, and because they're gold, it's a different way of owning gold. So I'm happy with that. I haven't touched my portfolio, and I don't think I will touch my portfolio for the next few months at least, because I'm comfortable where I am. If you're still long on stocks, I'm telling you to get out. The stock market now is for suckers, and you're gonna get wiped out, partly because it's denominated in money that's controlled by the state, and you really don't have any control of what's going on. The second thing is, what's been going on for a long time is that the insiders are ruling the market, and the market makers and the financial houses and the banks, the primary dealers, they're the ones who are making money because they're on top of the market. You as a small-time investor and saving your money and saving for your pension, you're gun meat. You'll be the one, the first shot in the battle. So stay out of that. Invest in gold, silver, real assets, real estate if you can own it outright, or your own business. Invest in yourself. Invest in something that you have control over. If you buy, 10 stocks in Goldman Sachs or Bank of America or whatever, you have no control whatsoever. You have no idea what's going on. Even your money, your cash, your currency, you're not controlling it. You're not the master of that. You want to be the master. You want to be the principal. You want to be the one in control. The governments are going to do more crazy stuff to try to prop up the economy. So if this down leg now continues, you can expect some more stuff to come up. And that will just be another opportunity to sell, because it will come back down again. This is gravity working. Gravity, reason, what should happen is working its way. And governments are trying to inflate a bubble to counteract gravity. It's not going to work. But they will do more stuff. And that's actually one of the things that I'm worried about. It's what can they do? Because what they can do, they will do. There are people at the Fed right now. There are people in the governments of the world and in these organizations trying to figure out schemes of what they're going to do to counteract reality. And they will come up with things. They will regulate capital flows. They will force people to buy government bonds. And one thing that's very easy for them to do, especially the Federal Reserve in the US, and that they can do, is that they can go into the market directly on the New York Stock Exchange and the NASDAQ and buy stocks. I don't think a lot of people know that, but the Federal Reserve can buy anything they like. There's no limit. They can do whatever they like, and they will do it to fulfill their mandate of stable prices and low unemployment, which is really just an excuse for other mandates or the real reason behind the Fed, which is to prop up the big banks and make sure they never go bankrupt in a bank run. But they can do a lot of things, and before this craziness is over, before this madness, this depression, this whole shebang is over, they will do all those things, and we will see amazing things that will stun the market. I mean, the Federal Reserve can prop up the market. Sure they can. Say the Dow falls down to 6,000, and then the Federal Reserve can say that we will support the market and buy stocks up to a level of the Dow of 10,000. So we will just buy until the Dow is at 10,000. What will happen? Well, they don't need to buy much because the market will rally to 10,000 the next day, the very same day. So they have a number of instruments like that they will use. And the thing is that it's costing them in legitimacy and trustworthiness and sort of policy-wise, it's costing them to break these promises. I mean, the latest thing that happened was the European Central Bank, who said they would never buy, government debt. They would never go in and buy the bonds and basically monetize the debt of the nations. But then, now they did it. Just last week they did it because they twisted the rules a bit and they bended it and they're buying in the secondary markets and all that. But that's basically what they're doing, is that they're monetizing the debt. And that was something that they resisted. The Germans especially resisted for a long time. And there are many other things that the central banks and the governments can do that there is still resistance to do, like going in and supporting the stock market directly. Stuff like that. But these resistance levels, they're falling, with the crisis. They're falling all the time. In Greece, there's, with the riots in the streets and all that, I mean, old promises and policies and all that, it's not worth anything when people are standing outside your door with torches, What you promised 2 or 10 or 5 years ago doesn't matter anymore. So all these promises will be broken and everything is up for grabs. Nothing is sure anymore. So the Fed is going to support the stock market directly. They might even put up negative interest rates on bank accounts so you're forced to use the money. Helicoptering money. I mean, Ben Bernanke, he said that he would go out with helicopters and drop money on people before he would accept deflation. Let's take him literally, Maybe he will do that. So stay out of this market. Stay in gold. It's going to get a lot worse.